Hey, folks, welcome to another wonderful winning Wednesday. I hope you guys like my new book that's over here. Guess what? It's the only book that I have ever purchased that has no words in it. It just has an expensive cover. But we want to welcome you to another wonderful Winning Wednesday. We hope that you are enjoying and having a wonderful week, not allowing anything to get you out of your state of flow. Today, we're going to be talking about Net-30 to revolving business credit and what is the best credit. This is a topic that I am more of an expert on. Eunice is usually here giving us the great advice that she has um, around real
Life
estate
insurance
and
and
cash value life insurance, right? But this
mhm.
is where I am going to jump in and do most of the driving today. But the first thing that we will start out with is just to really have a conversation because most of the business owners that I speak to, even when they have a level of competence inside of the business credit space, they don't really understand what net 15, net 30, net 60 actually means. And this is something that we'll spend a little bit of time on because when you're talking about any of the nets, it's really not about funding, right? The
Mhm.
net 30s is about how you are going to build credibility, right? So it is actually a phase of building credibility. You're working with vendors such as Uline, Quill, Granger, etc. And the primary thing that you're looking to do is build out a payment history that actually is going to get reported to the three business credit bureaus. And in case you don't know, Dun Bradstreet, Experian Business, and Equifax Business are the three primary business credit reporting agencies, right? And the whole purpose of this phase is that you are going to be provided with short term trade credit. Now, the 15, the 30, the 60 that falls behind that net is the number of days that you have to make payment in full, right? So they are extending you credit, but they are expecting the full invoice to be paid in that time frame that they have provided to you. Eunice, anything that you would add on that particular point?
No, I love the explanation that you've given there. But what came to my mind is, as a business owner, how do you know who to go to so that you can have this type of revolving credit? What are the requirements? Can I just start up a business today, go find a company that offers me a net 30 revolving credit, apply, and I'm in?
Remember, net 30 credit isn't revolving credit. And there is a difference between the two because revolving credit
Yeah.
actually requires a minimum payment to be made, right? Whereas
Mm-hmm.
a net 30 is requiring the full invoice to be paid in 30 days, right? So the full invoice has to be paid. Whereas when it comes to revolving credit, it functions more like a credit card, right? Or a line of credit. Revolving has a minimum payment that is required, right?
Mm-hmm.
And you have your maximum limit, and you only have to pay the minimum, but once you have paid off that charge, it goes back up. So if your credit line is $20,000, you use 15. Once you pay back that 15,000 or 5,000 is what I was actually thinking because you don't want to overutilize the credit, but then you would then have access back to that full 20 once that amount is paid. Now,
Mhm.
this is what I typically consider to be tier 2 when you get into the stage of revolving business credit, right? Because this can be built using only your EIN number, and it is unsecured, right?
Okay.
So there's the Net-30 or the Net X 15, 30, etc. And then there is revolving business credit. I think many businesses can survive at these two levels, right? But at the end of the day, I believe that the reason why a business is looking to establish itself is so that it can have access to large cash credit. That's when you're having monies being deposited into your account, and that's where you can use it for things like payroll, you can use it for equipment purchases and things, like that.
Mm. So would you then say, as you are building your credit, this is like the initial stages of you establishing yourself as a credit or as a business that has its own separate credit profile?
Exactly. Now, if you are in certain services industries, you can go with like a Granger or a Uline and make purchases
Yeah.
of office equipment, envelopes, just different things that you need to make, right? But the real difference here is that this is what you're going to be doing in months 0 through 6. And I would say that this is going to be stage 1 or your foundation stage, right?
Mm-hmm.
At this stage, the foundational stage, Net-30 accounts are going to be your best, right? They actually help you to build out your paydeck score as well as your IntelliScore, and it's going to be tied to your business profile. At this early stage is when you are establishing relationships with your vendors, and this is where you're going to be creating your financial footprint. So one of the things that I typically use is you can go on to Experian, and if you're having a conversation with a business owner, you can check there just to see if they even have a credit profile reporting. I would say
Mm.
probably in 50% of the instances where I have had to run this, there wasn't even a business profile created. And that's where we have to then start at point number 1, where you establish all of that, right? But I believe in many people are often trying to skip this stage, right? And when you skip the foundation stage, it makes it more difficult when you're going up to stage 2, where in stage 2, you're actually building leverage. Does that make sense?
That makes sense. So, with what you just said, I believe then it makes sense to say when you start up your business, and a lot of times I think I remember when we started, the first thing we were looking for was to open a business credit card,
Mm,
right? I think a lot of us just think that as you start a business, the first thing you want to open up is a business credit card. I know there is more information with regards to the business credit card, whether it's really under you or the EIN. But the jinx of it is just that when you start a business, or when most start a business, they think about just getting that credit card or a couple of credit cards to help them with their journey to building credit. However, what I'm getting from you also is that the best way is for you as a business to start at this level where you're establishing these net 30, net 15, get that, make that payment, and start having that history that's going to help build the business credit.
Exactly. Without having set up the foundational level, the applications for revolving are going to be harder. If
Mm-hmm.
not harder, it might actually results in denials, right? Because they're not going to extend you credit if they don't have a credit profile. Or in this particular instance, they're going to say, well, the business does not have a credit profile, and we're going to ask you for a personal guarantee. Now, personal guarantees aren't the end of the world. They're not like the earth is going to stop spinning if you
Mm-hmm.
provide a personal guarantee. But the methodology that we are trying to educate our audience on is to use your EIN and not have a personal impact on your FICO score, right?
Yeah.
So start at foundation. It typically takes between 0, 3, sometimes up to 6 months to be fully established at tier 1, right? But then once you have fully established yourself at tier 1, that's when you can move over to tier 2. And as you mentioned, this is what we did is we started applying for revolving credit, right? And at that level, that's when we were asking for, you know, store cards, right? Home Depots, your Lowe's, or you could actually even look for fleet cards, especially if you are in the transportation business and you're going to, have fuel that you need to purchase, etc. But
Yeah.
now, because you have built out that foundational level, you're going to see that you have a stronger, more in-depth credit profile at tier 2, and that is also going to be coming with increased limits,
Yeah.
right? And to
Yeah.
be honest with you, this is where most people are trying to skip to, but they are missing the bridge phase, which is then having a negative impact on their business.
Yeah. And sometimes you get people who then say, "Well, I do have an EIN and I applied with it, and I didn't get the limit that I wanted, or I didn't even get approved, even though my business is good and money is coming in. I'm paying all my bills on time." It's because they missed this foundational stage where literally you have an opportunity to get, for example, a net 30, make sure that you are meeting the commitments of that as you purchase and you pay up in the required times and things of that sort. That's the critical stage that sets you up so that when you now go into the next level, you are not questioning, why are they asking me for this? Why is this denied? Or why has this not gone this way? Because they were missing information from your net 30.
Correct.
Good stuff.
So the next one is going to be stage 3, which I like to call growth and scale, right?
Hmm.
Here you have unsecured lines of credit, you have high limits, right? And when you have structured this properly, you follow what needed to be done at stage 1, you follow what needed to be done at stage 2. Now you have access to unsecured lines of credit, right? And this is where you can operate your business and not actually have it on a diet, right? Your business should not be a recipient of Ozempic, Wegovy, or any of the other ones. But what does this do, and how is it exciting for your business, right? A business is just like a small child. It's always hungry, it's always eating, it always needs a diaper to be changed, right? You're going to
Mhm.
be able to fund your marketing, right? Because if you don't have leads and customers coming through your door, you're not a business, you're more of a charity. You can now also hire on additional employees because now you're able to cover payroll, right? You
Mhm.
can buy inventory. In buying inventory at volume, you could also now receive volume discounts, right? And you also can float receivables at the same time because now you know you have a strong credit profile established. When you do these things properly, right, you not only give yourself access to the capital that you need to fund your business, right? But now
Mhm.
you also increase the valuation of your business at the same time
Mhm.
because all of this is established. If someone was coming in and they wanted to purchase your business, the multiple that you can have off of your SDE, seller discretionary earnings, you can now have a higher multiple because all of this is established. When this is not established, you're probably going to be trading at a 1.5 or 2 of your SDE. It just makes sense that this is something that needs to be done.
I like that. I mean, at the end of the day, what I'm getting from all this is that when you start a business and you're starting a business with the interest of making sure that this is going to be run as a business and it's not a hobby, you do everything that is necessary to ensure that you are setting up your business to be in a position where even if you were to sell it, there is potential to value it and actually put it on the market and sell it because it's been established as a business. It's not one of those, okay, whenever we can, we'll transact or service, like a hobby. It is a
Hmm.
business and you need to do the proper set up. You do the foundation, you go through phase two, you go through phase three, whatever it is that needs to be done to make sure that this financial entity here is really properly set up and properly managed.
What I like to say is that Net-30 or NetX builds the reputation, revolving credit builds the empire.
Ah, makes sense.
Makes
I
sense
like
to
that.
me.
I like
I
that.
think we've been talking about this for a long time, and I'm just trying to communicate the same message over 7 times, 7 to 9 times, and hope that the community is hearing me. So let's quickly transition over because we have a hard stop at the bottom of the hour. Let's talk about some of the mistakes that we see too often that business owners are making, right? One of the things that I see too many business owners making is that they are staying at the foundational level and just working with too many net 30 type of counts, right? And they believe that they have built out their business credit, right? You don't really need to have 10 plus net 30 accounts, right? You need to
Mhm.
have a couple of net 30 accounts that then gets you into foundation. From foundation to the building strategy, stage two, right? Because let's talk about what is it that lenders actually care about. They care about your payment history, right? And the depth of your payment history. They care about your utilization ratios. That's why I had to correct myself when I said you have a $20,000 limit and you used up 15. No, keep that utilization below 40%, right? Another thing that we have to talk about is your NIAX code because the industry that you are assigned or reporting for actually will introduce risk into your profile. So if you are in a gun business or adult entertainment, your industry profile is automatically going to get you denied for credit, right? Last two things that the lenders or funding sources are looking for is time in business and revenue consistency. That's why when we talked about it, the banks like to see an average of four nines. And four nines is anything greater than four digits inside of your account, right? So $10,001 is good. And then you got the low four nines, you got the mid four nines, and you got the high four nines, right? You could have
Mhm.
five nines just the same. The higher or more that they see in the account, the better off they're going to be, right? So, first mistake, staying in vendor mode way too long. Too many low limit vendor accounts can actually signal small scale, right? You're not able to make that up. You're not actually having access to revolving and building out that profile depth. And moving forward, let's talk about mistake number two. You want to have between three to six uh, net X accounts. The mistake that we often see is they're jumping to revolving too fast, right? And what you're doing at that foundational level is you are setting up your visibility to be fundable. And what does this require? It requires that you have your business address is consistent across all of the credit bureaus, especially with what you have with the State Corporation Commission. That's what it's called here in Virginia. It might be called something different in your state, right? You have to have address consistency with the State Corporation Commission, the IRS, as well as on your bank statements. Even a difference of abbreviating street and spelling out street makes it inconsistent. It all needs to be exactly the same. So if you do not have it the same, you're going to see denials. You're going to be asked for personal guarantees, and it's going to result in hard inquiries. These are things that you are trying to avoid. So don't put yourself into a position where you are receiving denials or being asked for personal guarantees. We're trying to avoid that. Yes, it's okay at the very beginning of your business if you don't have depth to your credit profile to supply a personal guarantee, but that's what you're trying to avoid is because you're trying to avoid separation between your business and your personal finances, right?
Mhm. Mhm.
So we always talk about avoiding PGs, right? And as I mentioned, again, properly built profiles increase odds of EIN only approvals, right? Early on, in order to get to revolving credit, yes, you can give a PG. But we have to remember that the goal is always to separate personal and business risk, right? We say this all the time. We want your business to survive and thrive past year five, right? The
Mhm.
data is there. The data tells us that, 50, 60, 70% of businesses will not make it through to their fifth year, right? But if your business should fail, it should not affect your family. That's what we are evangelizing here. That's the message that we are communicating. That is the message that we want you to hear from us. If your business fails, your family shouldn't. Make sense?
Makes sense. Nobody gets into business so that their family can suffer. So you want to make sure that you are protecting your family from all your business ventures to make sure that you're doing what is right for the family and what is right for the business just to ensure continuity.
Yeah. So, how do we bring this
Right.
home? Right? The best business credit is structured, it is strategic, it
Mm-hmm.
is staged properly, and it is built for scale while avoiding personal guarantees. So, structured, strategic, staged, built for scale, and not personally guaranteed. Everything that I just mentioned is not random, it's not rushed, and it's not emotional. Those are
Mm-hmm.
things that you want to take away from the equation. So,
Great information, great information. And for those who are interested in figuring out where they are in the process or where to even start, how do you tell people how to get a hold of you?
well, there is the QR code that you see in the upper corner over here. That's how you know it's going to be over here as I look at myself, right? So that QR
Mhm.
code actually allows for you to get a free business credit consultation with us. If you want us to pull your credit report, your Experian credit profile, we have another link that we'll send you so that we can use that time expeditiously and make sure that we can judge what is on your credit profile. So, what I am trying to say is that if you are stuck in Net-30 land and you've been denied revolving credit, it's not because you're not fundable, it's because you don't have a funding strategy, right? So you mentioned it. Use the QR code above to book a business credit structure review with VIP business credit. And let's map out your path from vendor accounts to real revolving credit without wrecking your personal FICO score. I think that that's
All right.
what we were trying to communicate this week.
I believe the message has been loud and clear. I believe it's been informative. At the end of it all, the action is on you to say, where is my business? What does my business need? Are there certain things in the business that I still need to work on or that need correction? What better way to do that than to reach out to make sure that your financial business, well, your financial standings are right, to make sure that your credit is right and that your business is on the right track to be able to ensure that it has established business credit and that it is set up for growth in
Mm.
the near future. So, do you want to wrap it up? As for
Yeah,
me, thank you all for being
well,
here and see you next week
the
on another.
goal is to thrive, survive, plus thrive past year 5. And VIP Business Credit is there to help you, along with our sister company, VIP Coach. If you need to, map out what that 5-year plan is going to be around your values and your goals, just the same. And next week, we're going to pivot just a little bit and we're going to have a detailed conversation around policy loans versus traditional loans, right? We've been talking about it for a number of years on things that people can do to actually leverage the cash value of their life insurance policy, and we're going to compare and contrast that to if you were going and seeking a personal loan or a business credit, and what are going to be the advantages and disadvantages of both routes. So we want to say to you again, have another wonderful winning Wednesday. We look forward to seeing you again next Wednesday and enjoy.